Let's explore! That was the sound of silver squeezing ever so tighter. That appears to be what is going on in the market, according to some of the latest numbers that have been released. We're going to get into exactly what's going on there and what this means for a possible new breakout in silver's price. And what does that mean as well? We'll break it all down here. Let's see what has been talked about here with the latest Commitment of Traders report. That's right. Can be interpreted in a number of different directions, by the way. There's a lot that is behind the scenes on this, but Profits Plus ID has been posting a lot about what's going on behind the scenes in the silver market, kind of leaving it up to you to interpret exactly what that means. And I think that's actually good of him, but I tell you what, there's a lot of information there to digest, and it's really difficult to kind of make heads or tails of it, pun intended. But nonetheless, he says here that we may have the setup for the next silver breakout. That's unusual for him to actually start out with his interpretation right out of the bat. And this tells me that probably there may be more to this. But what does that mean as well? We'll get to that in a moment. Massive silver futures liquidation by managed money, which is a net selling of 13,201 contracts, or 66 million ounces, or $2.5 billion worth sold over the last week. A net of 29,823 contracts are net long in managed money versus a massive net short position of 72,228 contracts, or 361 million ounces, or $13.7 billion currently short futures, which could be paired with physical or a spot deferred contract between producers and swap dealers. So what's important is the weight of the exposure in the futures market, he goes on to say. The shorts may not have the liquidity to cover without delivering the silver. There are too many shorts against the speculative longs at the moment. And that is the key phrase here, at the moment, which means that, anything could change between now and then of what's happening. But this point in time could lead to a breakout. Now, what also is interesting about this is I reported earlier about a massive shift in the silver market in general, with more going into long positions for silver. The tide is turning. In other words, the big bullion banks aren't having the impact that they had before if you believe that they are suppressing the price of silver. When we break this down even further, the interpretation from Grok is that it highlights a significant shift in silver futures, with managed money liquidating all these contracts and holding a net long position against the 72,228 contract short position by producers. So it's suggesting that there's potential vulnerability in the market if a price surge triggers a short squeeze. In other words, a squeeze already being there in that aspect. Remember, the short squeeze is very different now in 2025 than it was back in 2021 and 2022. It was a retail squeeze back then, essentially squeezing much of what you see in front of you, coins, bars, and rounds. And so people were buying a whole heck of a lot of it, causing premiums to go up. But the actual silver market, the more important that determines the price, that was not affected. Hardly at all, maybe a little bit, and the price did increase slightly. Now we're seeing it move because of what's going on and other factors such as geopolitics and inflation. In other words, the loss of the value of the dollar since the last silver squeeze to now has been great. It's been well over double digits, multiple times over. And that is having an impact as well, too. Nonetheless, just because this is happening and just because we may see another silver breakout coming, and it may be even imminent, does not mean we're going to not see dips in the market as well, too. My friends at Summit Metals, they know this all too well. And they provide great precious metal products at excellent service with fast shipping. So check them out at summitmetals.com. So this is interesting. Now, historic data from the CFTC's Commitment of Traders report indicates that such imbalances have preceded sharp silver price movements. If we look at the past and what's been happening, these are indicators. And the most notable last indicator of something like this that has occurred was in 2011, which when we saw it spike up to $50 an ounce or close to it, when short covering amplified at a rally, driven by industrial demand and speculative pressure. Now, research from the Journal of Futures Markets on commodity squeezes supports this, showing that when short positions exceed 70% of open interest, which is currently, as I remind you, 361 million ounces, liquidity risk increase, potentially forcing physical delivery or cash settlement if traders cannot cover, a scenario complicated by COMEX's history of cash settlements during tight supply. And my audience is great because I've had folks remind me about what's going on, like JM Unleashed, about the lease rates being high. Of course, I don't know what the state of the lease rates are right now, but likely this is something else, and it means that perhaps we are in a situation where we could see this thing break out. And what does the silver breakout mean? Well, I'm talking about maybe we should consider the possibility of nearing that $50 an ounce silver price again soon. In other words, keep your mind open to it as a possibility. I'm not saying that's going to happen. Remember, the silver market is complex. We do have these other rate cuts that are coming down the road. A massive Fed pivot is coming, and I talked about that in a video recently. Hope you will check out. That is going to be good for silver's price as well. I am admittedly very bullish on silver, but for me, being very bullish on silver does not mean that it's going to go to the moon. In fact, I'm just more open-minded than ever before to this notion of maybe climbing up into the mid-40s or $50 silver, maybe soon. And I think this time it may be better and it may stick more. But remember, $50 silver now is very different than $50 silver in 2011 and radically different than it was in 1980. In fact, those two times are really, aside from maybe 2011 to some extent, we're not going to see likely happen again, especially 1980. The indicators and the like that are there are just not here now. There's not any group of brothers that are able to corner the silver market now, but it can be cornered in different ways, and this is one of these ways that we're seeing with sort of a squeeze, a commodity squeeze. Now, when we talk about managed money, because this is something that you have to understand here, it refers to some of the hedge funds and portfolios managed by professional money managers, specifically commodity trading advisors, also known as CTAs, who trade futures contracts as part of a managed futures strategy. According to the CME Group, managed futures involves assembling a diversified portfolio of future contracts where the CTAs use systematic or discretionary approaches to speculate or hedge across markets like commodities. And that includes currencies, indices, and obviously silver as well as that. And I think the big bullion banks are a part of that, obviously. And so that is what's there. In the Commitment of Traders report from the CFTC, managed money is a category of traders, typically institutional investors or hedge funds who take positions in the futures market. These entities are distinct from commercial hedgers rather, or retail speculators, and they often employ trend-following strategies, going long, betting on price increase, or going short, which bets on price decreases. Those short positions are the manipulative efforts that many people accuse these big bullion banks of doing. Their positions can significantly influence market dynamics due to the large capital they control. And indeed, and so that gives you some perspective here. We're talking about this managed money for sure. And how this will play out, I'm not sure in terms of a radical shift or move to the upside. I think likely it'll be semi-gradual, which is kind of in a sense what we want. But I think that my prediction of $41 silver by the end of the year, I am more confident based off of this information and the 4 rate cuts that are coming between now and the beginning part of 2026. I am more bullish on that. Does not mean I'm going to be right. No. In fact, I'm getting to the point now where my track record on year-end predictions and the adjustments because I've been right are right about half. But it's not there yet, which means I've been wrong more than I've been right about silver. But nonetheless, I try to be as realistic about the metal in terms of its price proposition, but its value I've been right on since I started this channel. And its value extends beyond price. And when you understand the value of silver and understand the risk of participating in the market, well, you really can set your mind at ease. This channel likes to give you the latest news in the world of precious metals. It also speculates as well. Yes, I have gone into the speculation game, but I like to be as realistic as I can and in my price predictions. And I always tell folks that I could be wrong. Anybody else can be wrong too. I don't care how much of a professional you are, which I am not, never pretended to be. You should never make any decisions based off of what any one individual says, whether they are professional or not. Take a look at other opinions, see what other folks are saying here. And before you decide to go in on any kind of investment strategy or stacking precious metals, I encourage you to stack precious metals for the long term through the ups and downs. And that is really something that I've been very consistent on in this channel. And that's something that I cannot emphasize enough, because in the long run, you have wealth outside of the system. All of this silver has not changed. And even if the price moves $1 in a day or in $1.50 an hour, it matters not. The silver is the silver because we measure our wealth in ounces, not in currency units, dollars. And this is a losing proposition. It is unsound money. It is bad money. This is good money. And even though many can't see it right now because we don't transact in it like this, it indeed has stood the test of time in the last 50 years, and even since the Federal Reserve Act, and ever since 1964, which was the last year that there was silver produced in our coins here in the United States. Silver has been money for most of history, active money. It's dormant money right now. It's inactive. It's commodity money, but money nonetheless. So there you go. Let me know what your thoughts are in the comment section down below. Hope you found this video informative, insightful, and educational. I'd like to extend a multitude of gratitude to each and every one of you for taking the time to watch, and to encourage you to please rate, share, comment, and subscribe.